Hey guys, Adam here from DirectionTrader.com. Let's do today's mid-morning recap and looking forward video. It's Friday, May 9th, and it's about 7:50 on the West Coast, so about 9:50 Central. Let's take a look at some of these markets. Here we have the S&P. On the S&P here, we as long as we stayed above the 8 and 21, I was looking to the long side. So as you can tell, I haven't had any S&P trades today. We're kind of flattening out here with our moving average. The market really feels like it's rolling over here, guys. So I'm going to be a little bit cautious. Going to be patient for us to get below some of these support areas, some of these different support areas. More importantly, down at the 40s here for the S&P. These 1840s is the next main level of support. If the day comes sometime next week, whenever we're able to break that level, we're off to the races, guys. We got a nice, quite a bit of run here to the downside. Not as much as a Russell, but nonetheless, for you S&P traders, you do have a lot of downside opportunity if this thing does start to break to the downside. If we start to get a break to the upside, that pretty well explains itself. There's more than enough room there as well. So right now, I will be flat. The nature of this market is definitely flat. Just sideways slop and chop, just waiting for this thing to go ahead and break. Tell us, and not just break and give us a head fake. Go ahead and break with some conviction, get some volume in this thing, and then start to either break one way or the other. It is appearing that it looks like it wants to break to the downside, but I'm not going to make too big of assumptions right there. I'm just going to go ahead and say I will be bearish below the 40s. And then I will be bullish above the highs here on the S&P. Going to take a little bit longer than that. If you want to push higher, we can be there in a day. Below the 40s might take a couple days, but nonetheless, that's what I'm looking at. Let me pop over to the Russell, guys, because you guys know my perception here. Whenever I look to short here, whenever this thing breaks these lows, or if this thing breaks these lows, it is off to the races with the Russell. There is nothing but room to the downside for the Russell. So if we're able to break through these areas of support, these big candle wicks that we have been developing over the last, let's just say this year, guys, because they even go back over here, there's one more area of support, all comes through here. So if we're able to break through that, this market has 100 ticks to the downside to run before it finds any real support. I mean, I know it can stop and turn somewhere in the middle of there, but as far as hard support, that's as far as it goes. So Russell to the downside. I've taken one Russell, and it's actually been a long side trade. If you've been watching any of my videos this week, I've been shorting off some of these support areas. Just a little bit ago this morning, we came down, we retested this low right here. We got a reversal back to the upside. I took a nice 20 ticker off of it back to the upside. But now that steam has kind of ran out, and I've been sitting on my hands ever since. So just waiting here patiently, guys. If we start to break to the downside and we have confirmation from the bonds and the VIX and everything is just working out well with our indications pushing down, there is a lots and lots of room to the downside with the Russell. So once again, I really recommend the patience. If you're trading intraday, use some momentum. Use a couple different time frames intraday, and make sure you're on the right side of the market at that time, because we're getting a lot of crazy price fluctuations from an intraday standpoint over the last week or so. So if you are trading intraday, just use a couple different time frames and make sure you're with the momentum whenever you're looking to enter a position, or the momentum is starting to shift. Such as I did this morning with taking that long opportunity. The momentum was shifting back to the upside, so that's whenever I got long. And then if we get a break below here, guys, with some conviction, there's a lot of room to move to the downside with the Russell here. So take a quick look at the NASDAQ. It's Friday, so I'm going to try going through all these markets, guys. NASDAQ's kind of the same thing as Russell, but not quite as extreme anymore. As you see, the Russell's actually trading down near these areas of support. NASDAQ's holding up a little bit higher, but nonetheless, we got these big candle wicks, these big containment ship bars. If we can breach below them, we got a lot of room to retest this support down here. So that's something to take a look at, but we do have all the momentum in the moving averages on top of the NASDAQ, so I will not be long unless we can get up above all that. YM looks virtually identical to the SP 500. So the same concept's going to go into play here, guys. We have an area of support up here around the 63s. It's It's more like 62.5, but nonetheless, we'll say 63s. If we get a drop below there, we got plenty of room to run all the way back down here, down just below these 1600s. No, the 16,000 level. Sorry about that. And if we get below that, then it's off to the races. So we do have some support on the S&P. We have some support on the Dow and a little bit of support on the Nasdaq. And then we are at the last area of support on the Russell. So very, very interesting trading times. But more importantly, I want to be on the right side of the move. So say we get a pop up, we're above the 8 and 21 period moving average on the Dow and the S&P, so we can look for nice long opportunities even though we're under resistance. And then on the downside, the Russell's really, I'm talking for bigger swings to the downside, the Russell's got its actually 8 and 21 period moving averages on top of it, pushing down on it. So something to take note of, guys. I'm going to take a quick look at the bonds here before we take off. That's the dollar. Look at the bonds here. Bonds still sitting here in this bull flag formation. We have this push to the upside. We got this bull flag formation, and we're looking to see if the bonds just want to head on higher. That's a very, very high percentage pattern for actually very high percentage bullish pattern. Bear flag here, looking for actual continuation back to the upside here with the bonds, as long as this holds. So that's it for me today, guys. That's it for me this week. We had a really good week in the trading room, so pretty grateful for some of these markets. Even though the market didn't do much, we were really able to knock it out of the park, so I'm pretty grateful for that. And we used all that was done because we used intraday momentum swings, and was able to capitalize on that. So another great week, guys. Thanks for watching these videos. I really appreciate it. I always get really good feedback from them, so I'm going to keep on doing them. I really appreciate that, guys. If you have any questions about anything that I say or anything that I do, don't hesitate to email me. It's adam@directiontrader.com. If not, thanks for watching, guys, and I will see you in Monday's video. Have a good weekend.